Okay, so this video is walking through how to respond to the Part B using the IA2 sample on the QCAA website. So for this activity, or the task, you are asked to identify and correct the conceptual errors in the general journal extract and the partially completed financial statements. You are to complete the fully classified statement of profit or loss, and the fully classified statement of financial position. You're given some stimulus for this, which is unseen. You're also given a spreadsheet which has balances sheet. So this has got the list of all the accounts and their balances. So this is the unadjusted trial balance, so before balance day adjustments. You're given a general journal extract which lists the adjustments that the company has proposed. You're also given a statement of profit and loss tab which looks at what the starting point for the company is. It gives you a starting point for the statement of profit and loss, and a statement of profit and loss tab for the statement of profit and loss. Our first step is to look at the stimulus and review the proposed general journals to check if there's any errors there. So for our first item, we've got term deposit details. So that's they've invested money, so this is going to be interest revenue, so they have the right account. The amount is $20,000, the term is 3 years, and the interest rate is 3% per annum. Now, if we're looking at the pay interest, it's half yearly from the date of lodgement. It's due on the 31st of December and the 30th of June, and then it's paid on the first day of the month following the due date. So the interest up to the 31st of December would have been recorded on the 1st of January. So we're having to accrue for the interest from the 1st of January to the 30th of June, because that won't be paid until the next financial year. So our interest calculation is our amount multiplied by the interest rate, so 3%, multiplied by the term. So in this case, it's half a year. So we're going to go 20,000 times 3% times 0.5, or 1 divided by 2. And we'll find that that is $300. So our first proposed journal is correct. There's no error there. So then we look at the next stimulus, which is the post-it note. Stock take conducted last week and revealed a shortage of 20 desk organisers at $10 each, 10 calculators at $20 each, and 10 memory sticks at $10 each. So we're going to have to reduce the value of inventory by this figure. So 20 times 10 is 200, plus 10 times 20, that's another 200, plus 10 times 10, so another 100. So $200 plus $200 plus $100. And if we go over here, we find that inventory has already been reduced by $500. So inventory, we're crediting, reducing our inventory, and our inventory adjustment account, which is an expense, has been debited. So that proposed journal is correct. We look at the next adjustment, or post-it note. So need to make an adjustment for wages at the end EOFY, end of financial year. So end of financial year is on a Saturday. Employees are paid weekly on Wednesday for a 5-day week worked from Thursday to Wednesday. And the weekly salaries at $2,100. So they haven't paid it for the Thursday and the Friday. We're assuming that it's a 5-day work week, so not including the Saturday or Sunday. So typical business. and working, so work Monday, Tuesday, Wednesday, Thursday, Friday. So here, they've been paid up to the end of their Wednesday shift. So we've just got the Thursday and the Friday. So 2 days out of 5, they haven't been paid. So here you get that 2,100, multiply it by 2, divided by 5, which is a fraction of the week that they've worked. And so that's going to be $840. Now if I look over here, the wages, they've actually got the 1,260. So that's an error. So here, I'm going to just make a comment. Error changed from 1,260 to 840. I'll put that in. If you want to, you could use the cell for that. So you could go 2,100 times 2 divided by 5, and that actually calculate what that number should be. So if you want to use that, you can do that just to help find that. Now, I'd recommend using comments to identify the errors you found. Alternatively, you can highlight them, highlight the cell so that it's obvious that you've identified that as an error. At least the accounts are around the right way, so wages is being debited, and we've got liability, the accrued expenses, crediting the $840, so that the accounts are correct. Next adjustment is that depreciation on furniture and fittings. That's the next balance day adjustment. So I'll look at that one first, and I'll go back up to motor vehicles. So furniture, we've got straight line depreciation. The estimated residual value is $2,000. The estimated life is 4 years. So straight line depreciation. So our annual depreciation will be the $10,000 minus the $2,000, so $8,000 divided by 4. So $8,000 divided by 4 years would be $2,000 each year. So they were correct last year. 2019, we're going to have another $2,000 of depreciation, and the accumulated depreciation will become $4,000. We go over here, we'll actually see that they've recorded depreciation of $4,000 for the year. So they've accidentally put in the accumulated depreciation for the 2 years, or depreciation for 2 years, not 1. So again, I'm going to go to Review tab. I'm going to go New Comment. Bring this over here so I can see it. Error changed from 4,000 to 2,000. Again, if you don't want to do comments, you could. I'm happy if you do the highlighting like that. Just make it obvious that you've identified that there's an error. Please just, if you do comments like this, just make sure you put them in a place where it's not covering up the rest of the document. Okay. So next we're going to look at the depreciation on the Ford Rambler, the motor vehicle. So this one's using diminishing balance method. The rate's 30%. So last year they calculated depreciation of $16,500. So our book value for that is 6,000 minus 16,500, so 43,500. So depreciation for this year will be 30% of that 43,500. So I'm going to get that number, multiply it by 30%, and the depreciation I get is $13,050. If I go over here, I see that they have calculated that correctly. So no error there, we can move on. So far we've reviewed the accrued revenue, the inventory adjustment, depreciation on motor vehicle, depreciation on furniture fittings, and the wages. We're left with the provision for bad debts, doubtful debts. So what information do we have here? I would like to increase the balance at year end for provision of doubtful debts from 3 to 3.5% of accounts receivable. Okay. So that's what we have to work out the new provision to be. Now, if we look at the initial balance, we get the bad and doubtful debts account, and our first step is to clear that account out. So that's going to be an expense, and we're going to credit that figure. So we're going to credit bad and doubtful debts, and we're going to debit the provision for doubtful debts. So that's our first step. Here we find it here that they've credited the bad and doubtful debts account by that figure, and they've debited the provision. Excellent. Now the second step is to calculate what the new provision should be. Now if I'm looking at the accounts receivable, it's here, $34,000. On my calculator, I'm going to type $30,000, and then I'm going to multiply that by the 3.5%. And that's 1,190. Now, if I want to calculate what the adjustment needs to be, it needs to be 1,190. I go up and I have a look at my provision. It started off at 1,000. So remember, it's a provision, so there'll be a credit. We want the final figure to be a credit. We have debited the figure by 1,430. So that's got us to a new figure of 430 debit. So to make that a credit, to get from 430 debit to 1,190 credit, I'm going to add the 430 to the 1190. So I'm going to need to credit my provision by $1,620. So just to go back over that again, and if you want to, you could write it down here. So provision opening was that credit, journal was a debit of 1,430, so that debit's now more than credit. So at that stage it's a debit balance. I want my closing balance to be at 34,000 times 3.5%. So I need it to be that. So my second journal needs to be that. I need to credit by that amount to make the balance 0. And then I need to credit a further 1,190 to get it to that new balance. That's how I worked out my, at the fact I need to credit my provision by 1,620. Now they have only credited it 240, so that's a mistake. That's an error. Review that, sorry. View comment. Error changed from 240 to 1,620. it is at least got the order around the right way. The provision, we are crediting it. Okay. So we've found 3 errors. Remember, we have to find 7 in total. So we've found 3 in the journals. We've now got our journals. Let's go back and we'll just check that. I think that's the end of the stimulus. There's no more stimulus there. We've covered everything there. Okay. So that's our step 1. We've calculated our journals. Step 2, we want to add those journals to our balances here and classify these. So I'm going to create 2 sessions of that Excel file. So I'm going to go View, New Window, and then I'm going to go Windows key and the right arrow so that I can have 2 windows with the same file open. So on one of them I'm going to put the journals, the other one I'm going to have my balances. So firstly I'll go through the accounts which are there. Capital, that's owner's equity. Bank, it's a debit balance, so that's a current asset. Accounts payable, current liability. Sorry. Interest revenue, that is revenue. Drawings is owner's equity. Wages is admin expense, admin. Cartage on sales, that is a selling expense. Bank charges is a finance expense. Cash in hand is a current asset. Telephone expenses is admin expense. GST clearing, which is payable. So that's going to, all the GST accounts roll up under current liabilities. Motor vehicle expenses, that is a expense admin, so I can actually just copy that. Inventories is a current asset. Cost of goods sold is cost of sales. Sales is revenue. Provision for doubtful debts is a current asset. Sales returns, revenue. Copyright is an intangible asset. Loan from a bank, so it's from a bank, so something you owe. That's going to be a current liability. Rent expense is a admin expense. We've got accounts receivable, just current asset. Bad and doubtful debts is a finance expense, sorry. And term deposit is, we looked at that before, it said it was 3 years, so that's going to be a non-current asset, and it's a financial asset. Or other non-current asset. So we'll just call that a non-current asset other. Okay. So we can classify these as a debit or credit. So the original trial balance, capital is a credit nature, current assets are debit. So if I can just copy that formula, so linking to that across. All drawings is a debit, expenses, current assets, expenses, current assets, cost of goods sold. Provision for doubtful debts is actually credit nature, so we'll go back and cover that later. And then go back, look at my credits, so it should be everything else. Interest revenue, yeah, that's fine. GST clearing, yeah. Sales is revenue, provisions credit nature, sales returns, that's a debit nature, I missed that one before. Loan from someone. Okay, let's check if these balance. So I've got an equals, I've done sum. So there's a mistake here. Let's find out what the difference is. So before we found that the original trial balance was out of balance, it was missing some accounts. When I went back, we go back through the stimulus, we find that the asset cost for the motor vehicles was $60,000, and that was missing here. So the accumulated depreciation and the assets, the motor vehicle and furniture fittings, were all missing. So I've added them back in. So the motor vehicle got $60,000. The furniture was $10,000. And for the original trial balance, before these balance out adjustments, we've got accumulated depreciation of $16,500 and $2,000. So put them in. Then gone through and done our adjustments. So I've added the new account, so accrued revenue. So if I get rid of that now, accrued revenue, and I've just gone equals and linked to up here. Inventory adjustments, it's just linking to that cell for inventory adjustments. So here we do our journal, so we've got accrued revenue is debit, interest revenue is credit. Inventory adjustment, we debited the inventory adjustment account, we credit the inventory account. For the provision of doubtful debts, bad and doubtful debts accounts, just link through for each of those. So provision for doubtful debts, we debit it with $1,430, and then we credit it the $1,620. So you can see both of them there. And the flip side of that for the bad and doubtful debts. For our depreciation, you can see this year's depreciation for the motor vehicles and the furniture and fittings is recorded here, and the accumulated depreciation is credited here. Finally, our wages, haven't done that one yet, so we will be going equals, we're going to link through wages. Because these comments you can't click on it, just click cell above it and you can link through. And accrued expenses, do we have accrued expenses there? No, we don't. I'll add that account, so accrued expenses. Now, accrued expenses is a current liability. So it's going to be credited it, figure there. So we can see here that these are balancing, so our journals balance, original trial balance balances. Now adjusted trial balance, where there's no adjustments, I'm just linking it straight through to the debit or the credit. Where there's an adjustment, like this one here, I've then gone through, back, and I've changed it so that it's linking to both the original trial balance and the adjustment. So we've done wages, so here's an example where we had our initial formula, and instead I'm going to change it, go equals, click on that, then go plus, and that figure there. And the other one I had no opening balance, it just had the credit of that figure, so I'll put that in there now. And we can see that these add up. And if you want to make sure that you've got everything here, well, your debits here plus your debits here should equal your debits here. Let's check. Oh, sorry, I take that back. It will not necessarily, because of these adjustments where both the debit and the credit are occurring. For these ones, you go, what is there more of? Here we can see that there's more credits, 1,000 and the 1,620, only one debit. So it's going to end up being a credit balance. So here I'm going equals, I'm going to add the credits, and I'm going to take away the debit. So that's how I end up with that figure. So just make sure that all your adjustments are being reflected in the adjusted trial balance. If you miss one side of the adjustment going through, you'll notice that the debits won't equal the credits. So that's that step. We've now got Our classifications, we've got our adjusted trial balance. Next, we look at our statement of profit and loss. Now, what I recommend doing is going data and filter. Select the headings first. I think we found was better. Data and filter. We can then filter on our revenues. So we've got 365,000 and our 7,000, so they're right. So this one is that figure minus that one. In your version, you won't have a formula in there, so if you want to check it, you can. But generally, we won't have formula errors. So less cost of sales. So I'm going to cost of sales. We've got our 110,000 and our 5,000 for inventory adjustments. I'm going to add those up, that's right. Gross profit is that number minus that number, so that's right. Then we go add other operating revenue. Where was it? Apologies, I missed that top line. So that was other operating revenue. We get our interest revenue, so I was missing that before. So we can see here the total is $600. So that's correct. So under there, we can just put an underline, put it just on the home tab. And we can add that to our gross profit. Next we can go less other operating expenses. And we start off with our selling and distribution expenses. So if you click on that to select all, then untick, then you can just get those. Now we've only got the one there, so I can just copy that one and paste it in. If you go to 1, 2, 3, it's going to be the same. It just copies that with no form. I'm also going to bold the heading, sorry. Now I've only got the one selling and distribution expense, so I don't need to subtotal that. So I can put that directly in this column here. I'm going to go equals, and I'm going to link straight through to that. My next category is general and administrative expenses. Give that a heading. Now, in this here you can call them whatever you like for your filter. So these ones here. So I'm going to select all those. I'm going to go Control C to copy. In here I'm going to go right click and the 1, 2, 3 for paste values. And we're going to be getting a subtotal here, so I'm going to equals, and that number there, and then I'm going to go Control C for copy and paste. Oops, that didn't work, sorry, equals, I'm going to link that through to our adjusted trial balance. So that's all of them. I'm going to sum them up, so I'm going to go equals, SUM, open brackets. Then I'm going to select all of those, and just press enter. So if you press enter, it automatically closes the brackets for you and adds them up. So under that one there, I'm going to go home, and I'm just going to put an underline there. So now I've got my total for selling distribution expenses and my total for general and administrative expenses. And the final category is finance expenses. got 2 there, bank charges and bad and doubtful debts. Now, an alternate way to get these numbers through would be to copy those 2, and then here just go again, right click and paste values. So the only disadvantage with doing it that way is if you later find a mistake here, you then have to make sure you correct it. It's not linking through, whereas if these ones are linking through, if you make a change here, it would change it automatically there. So it's up to you which way you go, but just be aware. This is quicker, but it doesn't flow through the errors. If you make a change later on, it won't automatically flow through. So again, there's only 2 numbers here, so I'm just going to add them together normally. Okay. So I'm going to add up all my operating expenses. So I'm going to underline there, go equals SUM, and select. You can either select those 3 cells, or you can just do a big just like that. Now that's my other operating expenses. I'm again going to go home, I'm going to underline, and I'm going to take them away from this figure here. So this figure was a gross profit plus adding our other operating revenue, less other operating expenses. So now that's all our other operating expenses here. And we're left with this figure here, and that is our net profit. And that document is now done. Finally, you go to Statement of Financial Position. Check my bank, all my current assets. We've got cash in hand, we've got our bank, that's correct. Accounts receivable is 34,000. We've got our provision, that needs to change. So change to 11 from 1,000. So that started for 1,000 is now this figure here, so that's an error we need to fix up. Okay. So this is a follow through error that we don't need to classify this as an error, it's just a follow through correction. So we'll fix that one there. We'll look at inventories. Inventories also have to adjust. So we're going to go review, new comment. Error. Change from 22 to, I can see 21,000. Accrued revenue is $300, not $600. So there's another error. So I didn't highlight that one. So we've found 3 errors here so far. We then want to get a subtotal for our current assets. So I'm going to go equals sum and select that. Okay. We then add our non-current assets. So first non-current asset category is property, plant, and equipment. Motor vehicles is indeed $60,000. Let's check. So $60,000 is right. Our accumulated depreciation on motor vehicles is not $13,050. it is 29,550. So again, change from so we've found 4 errors there, and we've found 3 here. So we've actually found all 7 errors now. So we're going to get a subtotal for the motor vehicles, what our book value will be. We're then going to be putting furniture and fittings. Now if I copy that, paste values, it saves me typing. Let's try it again. Apparently it was quicker to type. So furniture and fittings figure, that cost was $10,000. This cumulative depreciation, I'm going to go equals, and we've got the $4,000 there. We can copy that formula, put it there. Oh, hang on, that's around the wrong way. It's that less that figure, so we made a mistake. So subtotal, so I'm going to put that figure there. Okay. I'm going to get a subtotal for property, plant, and equipment. That plus that. We go home and underline. Next category is intangibles. My intangible is copyright. There's only one account there, so I don't need to get a subtotal. I can link that straight through. So I only need to use these extra columns if I need to get subtotals. Final category is other non-current assets. It's a heading, and it is a term deposit. The third way of doing this is actually just going equaling the name. Again, there's only one there, so we don't need any subtotals, so we can just put it straight in that column. So that's the last of our non-current assets. So okay. So we can get a total for all the assets. So sum just discovered I made a mistake. There I made the comment that I was making the change, but I didn't actually make the change. That was meant to be linking through to this figure here. My apologies. Okay, so that's our assets. And then I'm going to write less liabilities. Again, clicking select all gets rid of all the filters, and I'm just going to go current liabilities to start off with. So here I'm going to write current liabilities as a heading. Sorry, that was a non-current liability. My apologies. Let's try that again. Remember to always scroll at the top, otherwise you might miss some too. Now I'm going to get rid of that loan from ABC Bank because that's a non-current liability. Add non-current liabilities. And that's our loan from ABC Bank. That gives me all my liabilities, so I can put an underline that cell. Equals. I'm going to add those two numbers together. That's my total liabilities. Go home, there, that's going to give me an underline. So I'm going to get my total assets, take away my total liabilities. That should be my net assets. So wrong button. Control B does bold, so that saves you having to go up here all the time. You can see up there, it says Control plus B makes your text bold. This is represented by owner's equity. So let's find our owner's equity accounts. Capital. So remember that owner's equity is represented a little bit differently. It's capital, we add our net profit. So I can click on that one over there, I can see it's here. And link that directly through. Go back to my balances. I'm going to go home, put a bottom border, add those two together. Then I'm going to put less drawings. So that's the amount the owner's taken away from the business during the year. Home. And I'll put that next line. That minus that. Sorry. And good to see that net assets equals our total owner's equity. So for this one here, I'm going to click on that right arrow to see more options. I'm going to go top and double bottom border. And if you want to, you can also do that with your statement of profit and loss for net profit. That's our total. So that number equals that number. You've done it correctly. And that's our part B. We start off with it. We've got our balances. Accounts and balances, we have to classify them. We have to do our balance day adjustments, add any accounts which are missing from the account extract. Then we find our adjusted trial balance. Make sure that these trial balances equal, the debits equal credits. Once you've done that, you're also going through and identifying any errors in the general journals. Make sure you identify that they're an error somehow, so I know that you can understand that you have identified that there is an error there. So we've got 3 there. We've got our statement of profit and loss. We've gone through and we've presented that in the format. So we've got our sales, less cost of sales, adding in the other operating revenue, less our operating expenses fully classified to give us a net profit. A statement of profit, a financial position. We found 4 mistakes here. We've identified what they are and corrected them. We've shown our subtotals there, and our net assets equals our net liability, our owner's equity. Sorry, so we know that we've done it correctly. That's your Part B.